Well, good morning, everyone, and thank you very much for being here. I'm Mike Pichak. I'm the Commissioner at the Department of Financial Regulation, and I am joined today by members of our department's insurance division, as well as Mike Fisher, the Chief Healthcare Advocate. We're here today to announce a record settlement against Companion Life Insurance Company, a South Carolina company that offered health insurance to students at 10 higher education institutions in Vermont. The settlement totals over $1.8 million, representing the largest settlement the department has ever entered into with an insurance company. As detailed in the settlement agreement, Companion offered student health insurance plans to over 2,500 Vermont students during academic years 2014 through 2016 without filing those policies with the department for review or approval. Had the policies been filed, the department would have found them inadequate, as they failed to cover critical health benefits mandated under state and federal law. For example, the policies failed to fully provide coverage for mental health treatment, a critical coverage considering the stress of college. A recent mental health survey found that more than 65% of college students had felt overwhelming anxiety over the previous 12 months. Further, over 70% of mental disorders are presented by the age of 23, all of which demonstrates how important access to medical health treatment is for college-age students. Further, the policies failed to fully provide coverage for substance abuse treatment, another vital benefit considering the frequency of alcohol and drug abuse of college-age students. The policies also failed to fully cover preventative screenings and counselings, including testing for sexually transmitted diseases and contraceptive management, athletic injuries, emergent care, immunizations, and some general illnesses as well. The failure to include these coverages had real-life consequences. Hundreds of claims were improperly denied, resulting in 212 students paying over $480,000 in medical treatments that should have otherwise been covered. I am pleased that the settlement will provide full restitution to these 212 students, as well as any other students who come forward with an improperly denied claim that was not specifically identified during our investigation. The settlement agreement also outlines how the company made representations in its policies, in its brochures, and its flyers regarding the services or insurance policies in such a way that would tend to mislead students. The company failed to adequately supervise the actions of its agents and its pharmacy benefit manager during the relevant period of time in violation of Vermont law. The company also failed to submit annual complaint reports to the department and failed to demonstrate that it maintained adequate complaint handling procedures, both of which, again, are in violation of Vermont law. And last, the company was unable to produce medical and pharmacy claim records in a sufficient manner that would allow the department to reconstruct these claims from the beginning to the end. Each one of these failures outlined above is a serious violation of Vermont law, and when coupled together, it explains why we have a record settlement. The $1.8 million under the settlement will be paid out as follows. $950,000 will be paid in an administrative penalty to the state of Vermont that will go into the state's general fund. As previously mentioned, over $480,000 will be paid in restitution to students whose claims were wrongfully denied. $225,000 will go to the Vermont Legal Aid's Office of the Healthcare Advocate for important educational outreach that Mike Fisher will detail in a minute. Finally, $150,000 will be paid to the department's Financial Services Education and Victim Restitution Fund, the purpose of which was recently expanded to provide compensation for victims of investment fraud. The company has also paid examination expenses totaling well into the hundreds of thousands of dollars. At this time, I would like to introduce Mike Fisher, the Chief Healthcare Advocate, and invite him up to the podium. Mike?
Thank you, Commissioner Pichak. I am proud to stand with Commissioner Pichak and his team and recognize some really important good work here. This is a key function of consumer protection. At the Healthcare Advocate's Office, we receive phone calls from Vermonters every day who believe that they've been wronged in one way or another by their insurance company. And sometimes The difficulty they've faced is the complexity of our healthcare system, but sometimes the insurance company really has not followed their own rules or their contract or the law. It's important for Vermonters to see the Department of Financial Regulation standing up here and providing this most basic consumer protection and enforcing the state law. I'm proud to, I'm excited to be able to step in and help the Department of Financial Regulation in reaching out to the students who have been harmed here, and to put this money into play in terms of doing a targeted special outreach and education campaign and advocacy for Vermonters who live on Vermont's campuses to be able to provide additional support. So thank you very much, and it's good to be here.
Thank you, Mike. I would also like to commend the excellent work of our department staff for investigating and settling this matter, while also ensuring a stable marketplace for student health insurance. Specifically, I'd like to recognize our Deputy Commissioner, Kevin Gaffney, our Assistant General Counsel, Carla Nuizel. Thank you, Carla. Carla put in a tremendous amount of work in this matter and getting it over the finish line. Our Director of Market Conduct, Chris Rulo, our Director of Insurance Regulation, Phil Keller, our Market Conduct Examiner, Marcia Violet, our Administrative Insurance Examiner, Izzy Kaiser, and our Market Conduct Analyst, Chris Antoine. Thank you all very much for your excellent work. These folks behind me are dedicated public servants whose months-long investigation resulted in this record settlement. As Mike said, consumer protection is at the core of our department's mission. So I am very pleased that this team ensured that every student with an improperly denied claim will receive restitution. Further, this significant penalty sends a strong and simple message to the financial service companies that fail to comply with Vermont's consumer protection laws. There will be firm consequences. In closing, I would like to stress the importance of getting the word out about this settlement, so students that are owed money receive it. This population is very mobile. The 212 individuals who are scheduled to receive payments have more than likely moved multiple times since they've graduated just a few years ago. The department is working with the 10 institutions to get the best contact information, but we encourage students who purchase health insurance through these institutions during the relevant period and believe a medical claim may have been improperly denied to contact the department or the Healthcare Advocate's Office. Again, the policies at issue were sold during academic years 2014 to 2015, 2015 to 2016, and were sold through the following institutions: Burlington College, Champlain College, College of St. Joseph's, Green Mountain College, Landmark College, Middlebury College, New England Culinary Institute, Norwich University, St. Michael's College, and Sterling College. Again, students who have attended those schools during the relevant period of time that purchased insurance through them and believe they have a medical claim that was improperly denied should reach out to the department or the Healthcare Advocate's Office. At this time, I'd be happy to take any questions that folks might have.